So good afternoon to all of you. We will start with Indian economy. So we have to understand the difference first of all, that tradition and the current affairs. So here we are dealing with current affairs only, and we go backtracking. It means suppose I am mentioning RBI, so RBI is repo rate, so I will explain the word repo rate. I will not start with traditional, I will start with current. Whatever concepts you are not knowing or you want further explanation, you just tell me that this concept I am not clear, please explain sir this. Because ask lot of doubts. This time the difference in the Indian economy, as you have said, as I have said in the seminar, that the trend of the questions has been very different. If you see Indian economy, the mainstay of the current economic perspective, the main document of the government of India is economic survey, and this economic survey hasn't come out this year, and it will come out in July. So obviously after preliminary, we do not have full budget, so we have interim budget that we'll discuss in one class. But what's the main here motive? Now we need to understand each and every perspective, every development, especially after June 2018. Okay, economy, whenever we understand economy, the major chunk comes from January to April, the newspaper which are covering January to April 2019. So we see major events of 2018, that is second half of 2018, and each and every events of from January to April 2019. Getting my point? So if you see the major events, if you see the question paper, if you see the trend of the economics, they are asking traditional questions, but that is linked with current affairs. Like for example, if you are reading newspaper, you know that there is a big crisis in NBFC. What's the name of that crisis? Big crisis in NBFC, non-banking finance companies. IL and FS crisis, that is debt crisis. So here we can say that this particular crisis erupted in the later half of 2018. So in later half of 2018, this was the big event, because IL and FS is major NBFC and it can actually destabilize Indian economy. So we need to understand this major event. Now if we see another major event is government is on the one hand promoting startups, and on the other hand government is imposing certain kind of tax that is known as the angel tax. So on the one hand you are promoting startups, and on the other hand you are restricting by imposing taxes on that. So we need to discuss this particular issue also, because the Startup India is a major program, flagship scheme, one of the flagship scheme of government of India. So here we can say that these major events are very, very important. So first of all, we will take, I've actually sorted out some 35 odd topics for these three classes. Then in the, after first three classes, there is a holiday of Holi, and after that we'll discuss indices. Indices, all the indexes, current development indexes like gender development, human development index, all of the national indexes also, and at the last interim budget. So this is my request, that I am taking 4 classes for Indian economy. If you see the schedule, there are 3 classes for Indian economy, 1 for indices and 1 for interim budget. But according to me, indices will take around 1.5 hours, not more than that, and budget will also take the same time. So we'll club these two particular indices and interim budget into one class, and that will be your last class. So for 4 days, it means Monday, Tuesday, Wednesday and Friday, we will discuss all the current aspects of Indian economy. So go home, whatever you feel, you just write down and bring it tomorrow. So we'll discuss lot of doubts, because here in this particular preliminary examination there is a lot of volatility in economics, because we are not sure with any documents. So we have to rely on newspapers, because if they are asking traditional questions, that is also backtracking. So first we need to understand that what are the important developments in the newspaper. So whatever I am giving you in the printed forms, that is totally different, and whatever I am dictating you is totally different from this particular thing. Okay. And you will give the test on Sunday, that is your third source. So my notes, whatever I am discussing, is the source is the Hindu newspaper and major other newspaper of Business Line, etc. Okay. So we'll start with the topic. So we write first topic. IL and FS crisis. Anyone with the full form? Infrastructure, you write infrastructure, leasing and financial services. Infrastructure, leasing and financial services. Infrastructure, leasing and financial services. Now let me tell you one thing more, that this particular crisis erupted around July, August, September 2018, and we will not discuss the perspective form of this crisis. You are getting my point? Here I am only give you the content, will not give you perspective, because perspective is the requirement of mains examination. So here we will deal with the content part only. So we will not discuss what is the issue, what is the solution, what is the way forward. So we will not going into that, because in preliminary they will not ask what is the way forward after this. They will ask what are the instruments covered under this particular crisis. If suppose the main instrument under this is commercial paper, if the question comes in the examination, what is the meaning of commercial paper, then we will say this is the question of traditional but linked with current perspective. Yes, please. Please try to be on time. Okay. So IL and FS full form is infrastructure leasing and financial services. This is the name of the company, and this company, so you write like this, this company is a NBFC. NBFC. So you write NBFC, what is the full form? Non-banking financial companies, not corporation. Corporation is a different term. So non-banking financial companies. So here the term important is non-banking. It means they are providing some kind of other services other than banking also. So we cannot regard these companies as a banking companies. Now what is the difference between NBFC and the banks? This is we need to understand. So NBFC companies are regulated by, any idea? Or banks are regulated by? In India, banks are regulated by RBI, and these NBFCs are regulated by? If the question comes, who regulates the non-banking financial companies in India? First option is RBI, second option is suppose IRDAI, third option is SEBI, fourth option is all of the above. What will you say? All of the above. Because there are different kind of NBFCs. Some kind of NBFC are regulated by RBI, some kind of NBFC are regulated by IRDAI. What is IRDAI? Insurance Regulatory Development Authority of India. Some are regulated by SEBI. This is a regulator of capital market in India or securities market in India. Some are regulated by RBI, Reserve Bank of India. So the first, when we trace back this genesis of IL and FS crisis, this was multiple regulatory authority. Okay. So you write, non-banking finance companies or NBFCs are regulated by multiple authorities. Depending on the nature of their work. For example, RBI, SEBI, IRDAI. Full stop. I just want to tell you one thing. Whenever I am explaining, you just be on the board and I will dictate each and everything. That too in a short bullet points. So at the end of the class, you have everything whatever I am speaking. But just be on the board and concentrate on this whenever I am explaining, and I will dictate after that. No, I'll explain. Abhi topic khatam hone do, we'll discuss that. Okay, NBFCs, these are not for profit obviously. These are commercial companies. These are there for earn profits. Okay. Now we need to understand this IL and FS, why it was defaulted. Default, you understand the word default? What's the meaning? Any idea? Quickly please. It means they are unable to service their debt. So there is one term called debt servicing. In examination, they may ask what's the meaning of debt servicing, because UPSC frequently asking 2-3 terms every year in economics. What's the meaning of opportunity cost? What's the meaning of legal tender? Getting my point? If you see the last year question paper, they are asking what's the meaning of merchant discount rate, MDR. So if they ask what's the meaning of debt servicing means if you have certain kind of debt, you just repay that servicing of your debt. It means suppose you have taken loan of 100 crore, you have already paid 30 crore, remaining debt your 70 crore. So if you pay that 70 crore, it means this is the process of debt servicing. This is called debt servicing. So this particular company is not able to pay its debt on the due time. So that's why it defaulted. Now we need to understand that what is the nature or what is the nature of the work of these IL and FS or any other NBFCs. Now what NBFCs are doing? Listen carefully. This is NBFC, and they are borrowing money and they are lending to some other projects. This is the process. It means NBFCs are the intermediaries. Even the question comes, what's the nature of the work of NBFC? These are intermediaries like banks, same. Now the question of infrastructure leasing and financing companies. If you see the full form of this, the first word is infrastructure. Leasing and financing means you are financing some project and it means you are giving certain kind of funds to the project. Leasing means giving particular amount of fund on loan. So here borrowing money and giving to the big funds. So if you heard about Chenani Nashri tunnel in Jammu and Kashmir, suna hai aapne? Have you heard about it? And that particular tunnel is funded by IL and FS. Now this IL and FS was a big company or is a big company, like owned by LIC, major shareholder, owned by Abu Dhabi Investment Fund. Some stakes are held by SBI, some by HDFC as well. So it means there are multiple stakeholders into that. So it means obviously it is a big company, and when it was defaulted, it means there was certainly a big problem. What's the big problem? They are borrowing money from the short term market and lending money to the long term projects. Borrowing short term, borrowing for 2-3 years and giving money to 10-year, 15-year projects. Now you remember the word, first one, infrastructure. Whenever you are giving loan to infrastructure, obviously it is more than 5 years. That's the long term. Whenever we see infrastructure, short term, medium term and long term, there are 3 time periods. Otherwise, whenever you see in the finances, there are only short term and long term. That is, less than 1 year is short term and more than 1 year is long term. But whenever we deal with infrastructure, it is short term less than 1 year, 1 to 5 year, medium term and more than 5 year, it's a long term. So if you are borrowing for short term, suppose you have borrowed money for 3 years and you have given the same money for 10 years. Obviously in the first 3 years you will not earn anything. How will you repay this? You will again borrow some short term money to repay this. So this particular company defaulted on multiple instruments, multiple short term instruments. What are those short term instruments? First one, commercial paper. ठीक है, तो मैं लिखा देता हूँ इतना सारी चीज़ें. So you write IL and FS defaulted. IL and FS defaulted on multiple short term instruments. Defaulted on multiple short term instruments. Such as term deposit, in bracket you write short, comma, commercial papers, I'll explain each and every term, don't worry. Commercial papers, comma, non-convertible debentures, etc. So these are short term instruments of borrowing money. Now full stop. NBFC or IL and FS, you write IL and FS leasing loans to long term projects, for infrastructural purpose, Here in bracket you write Chenani Nashri tunnel was developed or funded by IL and FS. Chenani Nashri Tunnel. Now you draw this graphic, this particular relationship. This is NBFC in between, borrowing money on short term basis, lending money on long term projects. सही होगा. So the word only is important. If the statement comes NBFCs are regulated by RBI, this statement is correct. If a statement is like NBFCs are regulated only by RBI, the statement is wrong. So be careful about the word only. Like you had a question I think 2 years back that after implementation of Digital India program, cash will reduce drastically in the economy. So the word here, keyword is drastically. Obviously it is not possible. After the implementation of GST, India's GDP will increase drastically. This was also the question, that because experts were saying that after the implementation of GST, 2% increase in the GDP. So that is not sure because we are not having perfect GST. Getting my point? Now there were multiple reasons for its failure. The first one is asset liability mismatch. Now what are the assets for NBFCs? These loans are assets for NBFC. Liabilities are borrowing. For the same line, what are the liabilities of banks? Depositors' money. And what is the asset for the banks? Whatever loans they are giving, credit or advances. So getting my point? So there is a problem of asset liability mismatch. So you write reasons for the failure. First one, reasons for the failure. First one is asset liability mismatch. Asset liability mismatch. If you want to write, you can write assets are loans and liabilities are deposits or borrowings. Second point is your liquidity gap. Now just understand what is the liquidity gap. It means you are not having money to repay. If you are not able to repay, you will not get short term money, so you are not able to lend money. So there is a problem of liquidity crunch. Here what is the meaning of liquidity? If you don't know any term, just raise your hand. There is no harm. What is the meaning of liquidity? It means the amount of money in the public domain. So that is what we call liquidity. Money is liquid. So second point is your liquidity crunch in the market. In the market, because no one is lending, no one is giving money on the short term basis. So in the market. Getting my point? Third point is now why they are unable to reap the particular loan from here, because there is a problem in these projects. If you think about infrastructure project, there are three required things. First one is you need quick statutory clearances. It means government will do the file work pretty quickly. Second is your land acquisition. Third one is your environmental clearance. If government will not play an important role in these three type of clearances, then there is a problem of delays in the projects. According to government estimates, this is the cost overruns. 2.33 lakh crore is the cost overruns due to delay in the project. It means this particular amount all the companies, individuals, government has to pay extra just to complete all the projects on time, and this is the exact figure by Government of India. So this is the reason of cost overruns, and that cost overrun is just because of delays in clearances. So there are three types of delays in clearances. So you write third point, delays in project clearances by the government, delays in the project clearances by the government. In bracket you write statutory clearance, statutory clearance. Second, after comma you write land acquisition, and third one is environmental clearance. So suppose you are making any infrastructure project, you require these three kind of clearances. If government will make any delay, then there is a problem of cost and time overruns, and cost and time overruns will lead to the problem of NBFC. So you are not getting money, so you are not able to repay. These are long terms, will get benefit in the long term, but you have to pay in the short term. So this is not possible. So the asset liability mismatch. Second was liquidity gap. They can ask in the statement. That's why I am putting stress on this. And the third one is your delay in the project. Fourth one is mismanagement of the board. Mismanagement. You write mismanagement on the part of board of ILFS, board of ILNFS, regulators, and credit rating agencies, Credit rating agencies. I hope you understand this point. It means on the part of regulator, because they are not able to predict this particular crisis. If they have predicted earlier, obviously they have done something, but after that they have to change the board. Now the board is under the chairmanship of which person? Uday Kotak. You heard about his name? Former IAS officer, MD of Axis Bank, Uday Kotak. A person with highest integrity. So he has superseded the board of ILNFS after the crisis. So government shifted this particular board, because this particular board of ILFS, government said that you are not capable enough to manage this crisis. So we are superseding with the certain kind of efficient players or efficient members. So government replaced the board. Government can do this under the Companies Act, and government can do this in the interest of public. So they given that in the interest of public, we have to take over the control of ILNFS. So here the statements are, what are the important things you have written? All the instruments, reasons, getting my point? So we'll write next thing. Next thing is ILFS, next paragraph, ILFS was declared as systemically important. Systemically, shall I write the spelling? Systemically important non-deposit, core investment company. In the short form, it is written like this. Core investment company, that is non-deposit and systemically important. Here systemically important NBFC are declared whenever they have asset worth of 500 crore or more. So whenever the NBFC, I'll make you write, don't worry. So it means this particular ILNFS was declared by the government as systemically important. Systemically important means if systemically important banks will fall, they will have huge impact on the economy. And according to credit rating agency and the regulators, these are big company and they will not fall, and they will not fall into the debt crisis or etc. But obviously this happened, or this statement went wrong, that's why they were in crisis. So you write this. The impact of fall of ILFS was directly on equity and debt market. Now do you know the difference between equity and debt market? Equity is certainly ownership and debt is equivalent to loan. I will explain in elaborated manner. Now you just understand that what is the meaning of ILNFS. It means they were saying that we were too strong to fail. So that is the tagline of systemically important banks, that they are too big to fail. That means they cannot fail. But what happened? Due to mismanagement and due to these things, that reasons we have written, they failed, and they failed to repay their debt. Now write in the next line, ILNFS is owned by LIC, comma SBI, comma HDFC, comma Abu Dhabi Investment Company, and it is overseen by RBI, So these companies are very important and too big to fail. So they have lot of variety of ownership. It means if they have failed, it means it will impact LIC, HDFC and etc. So you write. Next is the systemically important NBFCs. Are having asset size worth 100 crore or more, comma they accept public funds, and their 90% assets and their 90% net assets, you write, and their 90% net assets should come from equity, 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 comma preference shares, comma bonds, comma debentures, and debt, DEBT, and debt. So UPSC can ask that how we can analyze the systemically important NBFCs and what are the criteria. So they are 90% net assets. So here the term is net. It means suppose for example you are having assets worth rupees 100 crore and you have liabilities worth suppose 60 crores, then your net assets will be 40 crore. So this will not count as systemically important. Their net asset, it means after deducting liabilities, their net asset should be 90%. Getting my point? Now we have introduced lot of terms like bond, equity, debt, commercial paper, dated securities, terms. Okay, so we'll explain one by one. So first you write commercial paper. So you write terms 100 crore. So you write terms important with regard to ILFS. First is commercial paper. It is a short term unsecured. Promissory notes. Issued by companies. Have you seen any promissory note? That is a legal tender backed by RBI. That is also a promissory note, but it is a legal tender backed by the signature. Suppose for example there is a piece of paper and you have written that next month I will pay you 1000 rupees and I have done the signature. So this particular piece of paper is not legally backed because it is not a stamp paper. It is just a piece of paper I have given you that come in the next month and will take 1000 rupees from me. So that is unsecured. There is no security. You cannot claim. If I will default, if I will say that I will not pay. So in business, in local business, like in textile, this is very popular. In old times, hundi, If you have heard about this in Gujarat and Maharashtra, this is a popular term. This is also same as promissory notes. So commercial paper, actually this IL and FS defaulted on commercial papers of the company. The next term is your short term deposit. Deposits which are having maturity less than 1 year. Deposits which are having maturity less than 1 year. So any example? Any example you have? Treasury bills. So in bracket you write treasury bills. Bracket mein you can also write commercial paper. These are 7 days to 1 year. Any other term? You write non-convertible debentures. Now first understand the debentures. Just be on the board. Debentures are simple as an instrument of loan. Suppose for example, you all the people, suppose have given me the loan of 1 lakh rupees. 1 lakh rupees each, and this particular 1 lakh rupees I will issue a debenture of Kalan Academy. So this is your debenture of 1 lakh rupees. It means you will give me 1 lakh rupees and I will give you this debenture, and next year you will come with this particular document and you will demand your principal amount as well as your interest. So 1 lakh 10,000 you will get next year. So this is the amount of raising money. I am running a business, I also need money. So what I will do, these are the instruments of running a particular cost. So if you are saying this particular debentures, now for example next year I have defaulted, I will say that I am not able to repay this particular amount. So you will say, obviously you will file some cases or whatever it is, but if we agree with them mutually, then suppose for example my company worth rupees 100 crore, 1 lakh is how many? 1% share. Now I will not return your money, but I will give you 1% share in the company. Getting my point? This 1% share, you are the shareholder, it means you are also one of the owner of this company. So non-convertible debenture means these are not convertible into equity. This is your equity. Here equity means the part of ownership. So here this is issued non-convertible debenture. It means if ILFS suppose defaulted in the future again, then there will be no chance that people will take their equity. So these are non-convertible debenture. You have to repay. Convertible debenture, simple. Now there is one also term known as bonds. So what is the difference between debenture and bonds? The terminology difference only. Bonds are issued by government, sovereign government, and debenture are issued by companies. This is the only difference. This simple difference, if you want to write, you can write, because a lot of commerce students are also not able to answer this this difference between bonds and debenture. So main difference between bond and debenture is just of terminology. Bonds are issued by sovereign governments. Ownership is the only difference, and debentures are issued by non-government. Any other term? Any other term you want explanation? That is also your debt servicing. If you are repaying EMI, principal plus interest, that is your servicing of debt. But NBFCs are not allowed to borrow on long term, because they cannot accept deposits. That is the main difference. They cannot issue checks like banks. So that is why these non-banking. Why the term non-banking? Because they cannot issue, they cannot settle the payments. This is the main term. Payment and Settlement Act 2007 do not give authority to NBFC to settle the payments. Here settlement of the payments means if I am giving you a check, you can settle my payment with this particular piece of paper. So NBFC are not allowed to issue check, or also they cannot accept checks. And there is also a limit of deposits. So that's why they have to borrow money from the market, the only option.
आइडिया मतलब ये है कि इसका जो आइडिया है शॉर्ट टर्म बोरिंग और लॉन्ग टर्म लेंडिंग, तो इससे तो हमेशा ही नुकसान में रहेगा ना?
नहीं, not always, because all the infrastructure projects start reaping results, like toll tax, etc. If you are making tunnel, you can apply toll tax, you will get money, you will repay that. But you are taking short term money for long. But there is a problem of mismanagement in the governance of this particular company. When there is mismanagement at the top level, obviously, you have started defaulting on the short term loans. Any doubt in this topic? Any doubt? Shall we move on to the next topic? Next topic is your NBFCs, non-banking finance companies. Next topic is your NBFC. That is not important. Factual information. Administration. Supersede. They have superseded the board of ILFS for administration for temporary purpose. For temporary purpose. Because if government would not have taken this particular step, ILNFS defaulted, they collapsed, and if it is a big company, it means it will have huge impact on the economy. And you know this is a crucial time for 2019 for the government. So if government would have not done this particular step, then there may be, or there would have been a financial crisis in the economy. So that's why government took the step. Government infuses a lot of capital. NBFC. NBFCs are governed by which act? Companies Act 1956. Check out later on 2013, the new Companies Act. So right. NBFCs comes under the regulations of Companies Act. Regulation of Companies Act 1956, and later on 2013, because we had a new Companies Act in 2013. So that replaced actually the old 1956. There was no amendment. That particular 2013 Act replaced the 1956 Act. You're right. Next line. What are the businesses done by NBFC? So right, NBFCs are engaging in the business of loans and advances. Loans and advances. Comma, acquisition of shares, comma, stocks, acquisition of shares, comma, stocks, comma, bonds, comma, debentures issued by government or the local authority, or other marketable instruments, such as insurance and chit funds. First term. So if the question come in the examination, what's the main role of NBFCs? Now these are the roles. They should engage in financial services. Now in which kind of services they are not engaged in? So their primary business should not be agriculture, industry, etc. So we'll write this. Next point. NBFCs should not include any institution, should not include any institution involved in involved in involved in involved in agriculture, comma industries, comma sale or purchase of immovable assets, immovable property, right? Sale or purchase of immovable property as their principal business. If the question come, NBFCs do not accept deposit, what will be the answer? NBFCs do not accept deposits.
False.
But there are certain kind of NBFCs that accept deposits. So I have written CIC, ND and SI. This particular thing is very important because some NBFC, although 2-3%, but they accept deposits. So there are certain kind of NBFCs that can accept deposits also. So if the question comes with the extreme sentence, be careful about it. So write next line. NBFCs are systemically important when they have asset size of 500 crore or more, 500 crore or more after ILFS crisis, after ILFS crisis. Why they have raised the bar? Because according to their definition, ILFS was also systemically important, but they defaulted. So they have raised the bar of this particular thing. Now we write a small difference between banks versus NBFCs. So write in the short banks versus NBFCs. We'll write lines regarding NBFCs only. First point, I told you NBFCs cannot issue checks. Second point, they are not the part of payment and settlement system. They are not the part of payment and settlement system. What does it mean? It means banks are the part of it. If you want, you can write in the bracket after this sentence that it is governed by Payment and Settlements Act 2007, because UPSC may ask that. In bracket you write it is governed by Payments and Settlements Act 2007. Getting my point? Because Payment and Settlement Acts give certain kind of power to RBI if there is a fraud. Do you know that particular company erupted after demonetization? So I don't want to take the name of that company, but you can understand. So RBI can interfere into the anything fraud in the payment gateway or whatever it is. So if you are paying online, that is also the part of this act. You are, or your interest is protected under this act. This act was enacted just to protect the interest of the consumers. Next you write. Now you will tell me what is the meaning of CRR. You heard about cash reserve ratio? Yes. What's the definition? Any idea? Yes, please.
Bank has to keep a minimum ratio. Example solve
No, I am asking definition because UPSC will not ask example. UPSC will ask definition, or they will give in the statement.
So the reserve money which the bank has to mandatorily keep in the form of gold, bonds, government securities.
No, only in the form of cash, and that is in the RBI, not with the bank. So that is CRR, cash reserve ratio. You will find in your notes, okay, CRR. And now you know that banks has to maintain CRR. So what about NBFCs? If the question comes, NBFCs are also having mandatory provision to maintain CRR, what will be your answer? False. So you write NBFCs are not following CRR terms. Why? Because CRR is only for banks. But what about SLR? What's the definition of SLR? Government securities. So majority is government securities. They can also keep in the form of gold. They can also keep in the form of cash as well. In some books or in many books, any authentic notes, you will find that these are cashless. But this statement is wrong. In many books, many websites I've seen. But you can form SLR with the help of cash as well. But there is a problem. That's why banks are not maintaining SLR in the form of cash. Because if you keep cash at home, obviously its value will deteriorate due to inflation. So that's why they are keeping government securities and gold. I hope you understand. Now what's the case with SLR about NBFC? NBFC has to maintain or not maintain?
No.
There are two types of NBFC, non-depositing and deposit accepting. So those NBFC which are accepting deposit, they have to maintain SLR at 15%. So you write. But those NBFCs which are accepting deposit has to maintain SLR at 15%, 15%. Next point, NBFCs cannot accept deposit except some exceptional cases. NBFCs cannot accept deposit except some exceptional cases. And these NBFCs are known as deposit taking NBFCs. NDTL का net demand and time liability. So whatever the deposit and liability, there is a net amount. Suppose you are a bank, you are receiving 100 rupees, you are again receiving 200 rupees, total is 300. You are again receiving 500 rupees, total is 800. Some other person comes and withdraws your money, suppose 300. Then your net amount will 800 minus 300, 500. So of that NDTL. So of that, at the end of the day, you will find some NDTL, net demand and time liability. It will come in positive or negative, whatever it is. So you have to maintain according to that. 15% of NDTL. Banks keep it with themselves. And as CRR is maintained in RBI, that is in the form of cash. And RBI is not giving any interest rate on that cash. And that is 4%. Before 2007, they were giving interest rate. But after 2007, RBI discontinued giving interest rate on CRR. And that is in the form of cash. So current rate of CRR is 4%. And 1% is equivalent to 24,000 crore. So it means if you increase 4.5, banks has to keep 12,000 crores extra. Getting my point? That's why RBI is not touching CRR under normal circumstances. They're keeping as it is, 4%. So for the long time it is 4%. I think it was D. Subba Rao, the governor of RBI in 2011. He actually reduced this CRR from 4.5 to 4. And I think after 2012, it is continuously 4%. So now you write last point. NBFCs are governed under Companies Act, but banks are governed under NBFCs are governed under Companies Act, but banks are governed under, yes please, any idea? Banks are governed under Banking Regulation Act. What's the year? 1949. The year of nationalization of RBI. Like for example, you heard about FEMA, Foreign Exchange Management Act. That FEMA replaced FERA. So there is no regulation regarding FERA. Everything is controlled under now FEMA. So on the same lines, it is Companies Act 2013 that replaced 1956. There is no amendment. Whenever you have amendment, the main act remains same. Like Banking Regulation Amendment Act 2007. After that 2007, RBI started discontinuing interest rate on CRR. But Banking Regulation Act remains same, 1949. I hope you are understanding. If you have any doubt, you can ask. No problem. That's the crash course. I have to clear all the doubts. No, all over India, spread across all over India. नहीं होगी ना, then they will not NBFCs. The tag will not be NBFCs. Financing companies, their principal business cannot be agriculture. They cannot do farming. Getting my point? They can give loans to the farmers, but they cannot do farming. There's a difference. Getting my point? वो भी पढ़ाऊँगा. Payment banks, different category. These are payment banks. 11 payment banks. Paytm, Airtel, आपने सुना हो. So you write why this was in news, why NBFC was in the news, just because of ILFS, and there is also one term called credit rationing. See, so we'll write, do not write, you write RBI allowed banks to provide partial credit enhancement. Partial credit enhancement. Partial credit enhancement to the bonds issued by non-deposit taking NBFCs. Non-deposit taking NBFCs. Partial credit enhancement. So you write which are systemically important, and registered under, under Reserve Bank of India and NHB. What's the full form of NHB? National Housing Bank. So it is also a regulator of housing finance in India. Now what is the meaning of credit enhancement? We need to understand. So you write partial credit enhancement or credit enhancement means improving credit rating of a corporate bond. Improving credit rating of a corporate bond. Corporate bond. Now suppose if I'm offering you two types of bond. Bond, you understand? Yes please, yes or no? suppose the bond belongs to TCS and another bond belongs to ABC company of Africa, any African country. If I will offer you two bonds of 1,000 each, this is giving 10% interest rate, this is giving 10% interest rate. Which one you will prefer? If you want to buy one only. TCS, obviously, you will not answer, I make it like that. But why TCS? Because you heard of this name, you have trust, you know that this company will repay next year. You don't know about this company. So, like for example, there are few companies, approximately 5%, but 95% companies are like this. You don't know. If suppose it is giving 12% interest, I think then only or then also you would prefer TCS, because you are thinking about your 1,000, not about 2%, 2% extra. So just because we can say that TCS is systemically important company. It means a system will not collapse. You have certain kind of trust. If I will give you another option, Government of India bond. Now if you have choice, you know that if government will be in the power next year or not, but Government of India will always there. That is a guarantee of central government, not any particular party. So this is what you give security of this particular. So partial credit enhancements are the bonds issued by the NBFCs, and these NBFCs, the guarantee is given by, क्या लिखा है पढ़ो, guarantees is given by, yes please, corporate bond or any bank. Bank can also guarantee any bond. So if someone will guarantee, suppose this ABC company actually demanding money, but the face of this particular bond suppose belongs to HDFC, then obviously will buy, because the risk is now of HDFC. HDFC is giving guarantee that they will repay. So that is how you can enhance your credit enhancement. So partial credit enhancement is the current scenario. RBI allowed all the NBFCs to enhance their credit in a particular period. So for this particular period, they have given the guarantee to these bonds, and that guarantee is given by bank, corporate, etc. Anyone can give, because they are having one important thing, which is good credit rating. Ratings are important. Suppose you are buying any particular item on the e-commerce website, what you will see first? Customer reviews, how many stars. So these are rating. If you have 4.5 to any movie, you will go and watch that. So these are important, credit ratings. So you write
Credit enhancement rate.
credit. How will you enhance the credit? Just because by giving guarantee, and guarantee is given by either banks or credit rating agencies. Credit rating agencies were in the news last, so we will discuss that also. But here the major important thing is that RBI allowed banks and corporates to provide partial credit enhancement to NBFCs. This is the news and this is the concept.
So फायदा क्या होगा?
They can raise loan,
NBFC
more money.
NBFC लोन रेज कर पाएंगे ना, वो थोड़ी कर पाएंगे बैंक जो सिक्योरिटी दे रहा है.
But banks have stakes, like HDFC had stake in ILFS. Before the crisis, were you aware about ILFS? Just because it is in news? There are n number of NBFCs, there is no counting. So how do you trust? So these banks has ownership. Suppose LIC will give guarantee. Getting my point? Any doubt? So you write terms under this heading. We will discuss two terms. First is open market operations. Open market operations. Any idea? Simple term. Question in 2013 preliminary examination about open market operations, but this time this is also in news just because of two things. So this one NBFC, other thing was your rupee depreciation later half in the 2018. So open market operation, what's the meaning, any idea? So RBI will come into the open market and RBI directly buys or sells government securities. This is what we call open market operation. Otherwise RBI has indirect role. RBI has indirect role how? RBI reduces the repo rate, then RBI will wait for the response of the banks. If banks will reduce the rate, then there will be the effect seen on the economy. So that is indirect with a chain. But open market operation, when RBI involves directly in the market, buys and sells government security. So write open market operation. The buying and selling of government securities, the buying and selling of government securities, buying and selling of government securities in the open market by the central bank, of any country. Any other term you found in this particular topic of NBFC? Any other term you need any explanation? Sterilization is a different term, it is not the part of this. We'll see tomorrow, because today we are focusing on money banking, because there are two pillars in economy. If you see, there are two pillars, monetary policy and fiscal policy. So should put lot of emphasis on both these things. And the third pillar for economy is your external sector. So number 1, number 2 and number 3. If you cover these three, majority of the economic question you will get. So first is monetary. Tomorrow we'll discuss majority of fiscal aspects like lot of taxes, etc. Then we'll see mix, under mix we will see rupee depreciation, external commercial borrowing is type. But external commercial borrowing is related to RBI also, so we'll discuss today only. Next term is liquidity coverage ratio, LCR. Heard about it? If you are reading newspaper, I think it was the time of November, December, the Hindu, liquidity coverage ratio was in the news. So liquidity coverage ratio, what's the meaning? It means suppose you are having certain kind of outflow of cash. It means suppose I am a bank and I am experiencing outflow of cash. So it means I have liquidity crunch. So I must have certain reserves to cover that liquidity shortage. So whatever I am keeping the amount of money as a reserve, that is known as liquidity coverage ratio. Simple example, suppose 100 crore as a bank I have, 25% I have given to CRR and SLR, it means remaining is 75 crores. Under this 75 crores, suppose for example 70 crores are given for loans, 5 crore I am keeping as a reserve just because any depositor will come and demand its money. Getting my point? So this 5 crore is your liquidity coverage ratio. Whenever suppose when you go to the bank to withdraw a huge amount like 2 lakh, 4 lakh, what was the opinion there? Bank's employee will say, sit down for 5 minutes, I am arranging. Because they do not have this amount of cash in their vault. So their liquidity coverage ratio is short. If they will say it will take 1 or 2 hours, it means they will borrow from some other banks. So whatever you are keeping just to maintain or just to bridge the gap between your mismatch between deposits and your loans, that is what we call liquidity coverage ratio. So write a formal definition. Banks must hold an amount of high quality liquid assets, high quality liquid assets to fund the cash outflow, full stop. Any other term you want to discuss, because the first two topics are linked together? Any other doubt? Because we are moving towards totally different topic. Any doubt? Please see, very, very important topic, very important. If you are finding it boring, I don't have any option, because this is a most important topic for preliminary 2019. If they will not ask in preliminary, they will ask in mains. If they will not ask in both these, they will ask in interview or next preliminary. So question will surely come on the regulation of banks, NBFCs, their structure, who controls them, they come under which act. These are important information. So all the information you have written. We are not going in a perspective debate. Then what is the solution of this particular crisis? They will not ask solution. Uday Kotak was the chairman. So if you want to write, you can write. Otherwise UPSC is not asking the names. And who superseded the board of ILFS? That is Uday Kotak, former IAS officer and MD of Axis Bank, chairman and MD of Axis Bank. वही बोल रहा हूँ, there is a problem, fundamental problem. Some are controlled by SAB, some are controlled by RBI, some are controlled by IRDAI. So there is a problem, because there are lot of NBFCs. We cannot count on figures. Like if you study post-independence, there are 565 plus princely states. Government is also not sure how many princely states there are. Some says 563, 565, some says 565 plus. So on the same lines, NBFCs are also not having any limit. You can also open NBFC. Chit funds you understand? That kitty party of a colony, that is chit funds. So if you register that in companies, that will also become NBFC. You are pooling funds, you are giving loans to your members. Shall we move on to the next topic? Very important, another. E-commerce policy. Heard about this? Huge debate. India adopted e-commerce policy or implemented from 1st February 2019, and it is targeted towards two big giants of e-commerce in India. What are those? Flipkart and Amazon. Because these two companies are not Indian companies. Flipkart also not Indian. You know why it is? Because Walmart overtook all the ownership of Flipkart. So Flipkart is not having any Indian ownership. So Walmart is of Flipkart is of Walmart, and Amazon, obviously, you know, it's an American company. Walmart is also American company. So these two companies are the big players of e-commerce market in India. What is the definition of e-commerce? What's the meaning of commerce? Simple.
Buying and selling.
Buying and selling, or trading with business. So e-commerce here, E means obviously not in a physical terms, on an electronic platform or digital platform. So this is a perfect definition. Now you write, just tell me one thing, who controls this policy, e-commerce policy in FDI? Because here we are talking about foreign direct investment. Who controls foreign investment in India, foreign direct investment, FDI? Shall I give you a hint? समझ ही जाओगे उससे. In the budget, there was one department renamed as, who calculates, chalo chodo. Heard about this department? Under which ministry? Ministry of Commerce, MOC. This particular department has renamed as What's the full form? Department of Industrial Policy and Promotion. This particular name has been changed in this budget. Now the change name is Department for Promotion of Industries and Internal Trade. This is the new name of DIPP. So UPSC may ask that who calculates this, and if they have given this particular name and on the fourth option is none of these, you will think that this is calculated by DIPP and it is not there. So you will mark none of these. But they cannot give both because these are the one and the same thing. So they will give none of these. And you will mark none of these because you never heard about this if you have not read the budget document. Department for the Promotion of Industries and Internal Trade. Why they have changed this name? Like previously, Department of Disinvestment was there, and the name has been changed from Department of Disinvestment to DIPAM, Department of Investment Public Asset Management. Uska reason hai, there are reasons like now internal trade consists of major part of India's export as well as the role of SEZ has started rising. That is why they had to include internal trade. Like previously Ministry of Agriculture, now Ministry of Agriculture and Farmers Welfare. Ministry of Environment, Ministry of Environment, Forest and Climate Change. So that is the main reason, because they had to include internal trade and it consists of major part. So they have to promote, like Department of Fisheries in the budget. Getting my point? So name has changed, and this particular FDI under e-commerce will be controlled by Department for Promotion of Industry and Internal Trade. So right. E-commerce policy regarding FDI is controlled by DIPP. In bracket you write this full form. New name, in bracket you write new name, Department for Promotion of Industries and Internal Trade. Now short form change, but UPSC can ask. No, DPIIT. So that is why you have to write in bracket new name is this. That is not the full form of DIPP. Full form of DIPP was Department of Industrial Promotion and Policy. Now there are certain kind of rules. So major three important rules I have sorted out, which is important for examination purpose. Actually there is a big policy, e-commerce policy, but for examination purpose, three important provisions are vital regarding e-commerce policy. So we'll write three and then we'll discuss one by one. First one you write vendors that have any stake, vendors that have any stake owned by an e-commerce company, cannot sell their product on that e-commerce company's portal, I think you have not understand anything with this sentence. I'll make it very simple with a daily life example. Suppose for example I am having 1% stake in Amazon. It means I cannot sell on Amazon.com. My product I cannot sell on Amazon.com. Now you read this sentence. Now read please. ठीक है. Now you understand? Next point. I'll tell you why these rules. ठीक है. First is, second is vendors who purchase 25%, vendors who purchase 25% of its inventories from the e-commerce group company, will be considered to be controlled by that e-commerce company, so thereby barred from, BARRED, barred matlab not allowed, barred from selling on its portal. Did you get anything? Can you explain? Yes, please. With any example? Very good. It means her company is controlled by Amazon. So you cannot sell. It means she can purchase only or up to 25% of the raw material. Last point, last provision. E-commerce firms will not be allowed to influence the price. Of a product. Sold on its portal by giving incentives to particular vendors. Drishtan, please help me. Okay. Tell me the sentence.
E-commerce firm will not be allowed to influence the price of any product by giving incentive to their vendors.
On its portal, by giving incentives to a particular vendors. These are two big companies, back-end companies. WS Retail is of Flipkart and this is of Amazon. And Flipkart is having around 40% plus shares, and Amazon is having under Cloudtail 49% share. It means these two companies under the second provision will not be allowed to sell on this portal of Flipkart and Amazon respectively. That's why they have countered, because they are giving deep discounts. So whenever you open Amazon.com, you will find somewhere there is a high discount, somewhere there is no discount. Because the product is sold by Amazon, they can give maximum amount of discount. But if any other vendor is using the Amazon platform, like we are having book published by Career Launcher, that particular book is not published by any Amazon company or Flipkart company, then they will not give you deep discounts. Getting my point? So they have quoted higher prices. So say on the same line, WS Retail and this. To counter these, now there are two models. For examination purpose, these three important provisions, very vital. So put a star mark on that, because this is very debatable topic. On the one hand, government is promoting FDI. Actually, last year FDI dipped. Since 2014, FDI has been rising, because in UPSC they can ask a trend. If you see the last year paper, current account deficit trend, fiscal deficit trend, trend of tax to GDP ratio. So on the same lines, FDI has been increasing last 4 years, and it has reached up to 60 billion US dollar in a year. Sorry, $60 billion last year, but this year they have experienced, India has experienced dipped in the FDI. Now you understand that there are two models under e-commerce. There is one model is known as marketplace model, and second one is your inventory based model. So right, there are two models. There are two models under which e-commerce market operates. Under which e-commerce market operates. Right, like this. Marketplace model and inventory based model. So first one is marketplace model is simple, providing electronic platform for buyers and sellers. It means they are acting as a intermediary, they are acting as a platform. That is why it is known as the marketplace model. They are providing market, like new market, like we have other markets all over the country. So we have, this is electronic market. One model under which e-commerce operates is marketplace model. I'll make you right, where buyers and sellers interact and they do business. Second is your inventory based model. What's the meaning of inventory? Back-end support. Back-end support. Suppose for example you have a small shop, retail shop, but whenever you ask such a unique thing, then shopkeeper will say just wait a minute, I'll bring it from the go down. So that particular go down, inventory or basement, whatever it is known as the inventory. So first you write what is marketplace. Under marketplace you write, it simply act as a platform, that connects buyers and sellers. So here simply they are acting as marketplace. Now inventory based model is simple. What Amazon and Flipkart is doing, they are opening their own company with the different name at back end. They will provide raw material, product, etc. and everything. That is inventory based model. It means you have certain kind of subsidy, and that subsidiary will provide you raw material, finished goods. So you can, obviously there is no extra cost in the value chain, because if you purchase raw material from any other person, suppose you have full production starting from the first stage to the last stage, then obviously your cost will reduce, but you have certain kind of intermediaries in between that. There will be commission, profit, etc. So your price will go up. So on the same lines, Amazon and Flipkart, that WS Retail and Cloudtail, these companies come under inventory model of e-commerce policy. So under marketplace you write 100% FDI is allowed. Under marketplace 100% FDI is allowed. Now you write under inventory based, what's the meaning of this? You write inventory of goods sold on the portal, inventory of goods sold on the portal is owned or controlled by the e-commerce company, So here what about the status of FDI here? FDI is not allowed in inventory based model. So right, FDI is not allowed in inventory based model. Because they have everything here. Inventory based model includes warehousing, logistics, supply chain, everything. Because whenever you order from Cloudtail India, you will get the product in 1 day, 2 day, 3 day, because they have their logistic services. They have their own company which can pick from Mumbai, Delhi or wherever it is to the somewhere Bhopal, Indore, whatever it is. Getting my point? That's why some product you will get in 3 days, 2 days, some product you will get in 1 week. So this particular model actually hurting small vendors. Getting my point? So this is just because in the interest of small vendors. So if the statement comes that new e-commerce policy favors the most, first example e-commerce companies, second example consumers, third option you have small vendors, then what will be the correct answer? Small vendors. Only 3 whatever it is, jaise bhi form mein. Getting my point? How questions can come in the UPSC examination. And these are all linked. Both. Because if you are only providing at marketplace, you will not earn any profit. You have to build technological infrastructure. These websites are very heavy. Amazon, these platforms are very heavy, servers are very heavy. You cannot take control. There are sites, ShopClues will get the benefit from this. So shopclues.com. No, that is both. But they are small vendors, comes under the category of small vendor. Like jabong.com, that was come under inventory based model, total model. Suppose you have open with your name like Ashwini, ashwini.com, you can purchase anything. He is producing at home, he is not incurring extra cost, he is providing the same material. People are doing like Uber Eats, the new model of Uber Eats and Swiggy is, they are not targeting restaurants, they are targeting home based homemakers. So now housewives are making certain kind of dishes and Swiggy and Uber Eats are providing these type of services, food, and they have low cost because there will be no brick and mortar. Brick and mortar, you understand? There will be no shop. So there is no rent, no electricity cost, no labor cost, etc. Nothing. They are making food at home and ordering with the Uber Eats. Logistics sector has immense potential in the next 5 years in India. That's why they are not crazy, they are not insane, providing food at 50%, free almost 30%, 40%. They are actually burning their money in, burning their pockets, because they know that in the next 5 years in India, logistics market has huge potential. That's why they are burning their money. Getting my point? So you write, this e-commerce, new e-commerce policy will benefit small vendors. Small vendors. Any doubt? Any doubt in this? Shall we move on to the next? Heard about this in the newspapers? I think it was approximately 1st to 5th December. GDP back series data. Here we will discuss some basics. Now UPSC has full authority to ask any question regarding national income. They haven't asked, I think since last 10 years, they haven't asked any question related to national income, etc. But this year they can ask, because they have full authority. Now this GDP back series data, here there are terms. First we need to understand what is GDP. We need to understand what is back series. Who calculates GDP in India? CSO under which ministry? पहला ऑप्शन होगा दैट इज मिनिस्ट्री ऑफ फाइनेंस, वही गलत होगा. Ministry of Statistics and Program Implementation must be. This calculates. Now this GDP back series data is compiled by CSO and Niti Aayog. So they can also ask question who compiled this particular data. Everyone knows that GDP is calculated by CSO. They will miss out Niti Aayog. So this actually back series data was calculated by CSO and Niti Aayog. Here I am assuming that you know what is the meaning of GDP, how to calculate national income. There are certain kind of methods to calculate national income. I am not going into it. If you don't know, I will explain in a brief manner. How to calculate national income? What is the definition of GDP? Shall I explain? GDP is actually the sum of all the final goods and services which are produced in the domestic territory of the country. So there are certain kind of keywords, very initial class of general studies. In the first class, I generally tell about GDP. So GDP, that main keywords is all the final goods and services. It means no intermediate goods. No intermediate goods means, suppose for example, there is a production of a rubber or production of tires. That particular production you will count in the GDP. But if these tires are applied or planted in any car, so if taken car final product as car, and you will calculate the value of car into the GDP, but you are taking 2 times the value of tire. So tire here, if they are planted in the car, tires are come under intermediate goods, and car will come as final goods, because after car you will not produce anything. So like it's iron, steel, these are the rubbers, these are intermediate products. So these are not included in the calculation of GDP, because if you include, you will count twice and you will not find the accurate figure. So all the final goods and services produced in a particular year, obviously a financial year, within a domestic territory, it means if that particular car is produced somewhere, some other place somewhere between the Indian Ocean, that will not be part, because Indian territory should be the main important thing. And all the goods and services, so both services as well as goods. So this is the definition of GDP. Now here back series data. What is the base year for GDP, current GDP? 2011-12 is the base year. Now what is the meaning of base year? Are you with me na? If you find anything lost out type shakal dikhe to just tell me. Base year is certain kind, in simple sense we can say a reference year. It means we can compare the result. Suppose for example in daily life, I will explain. Suppose you have done a graduation, 3-year graduation, there are 6 semesters. So suppose your base year or base reference year is your first year marks. So first year marks will come first, then second year marks you will compare with the first, then third year marks you will compare with second as well as first, then fourth year you will compare with third as well as first. So whatever you are looking back, that is your base year, because this is the place where I was entering into the college. Now I am at this. Suppose you have started with 60%, ended up in the 6th semester at 70%. So that is your growth in the last 3 years or 6 semesters. So on the same lines, if I want to compare the GDP data of 2018-19 that will come in the future, I will compare with 2011-12 as well as the preceding year. So 2017-18. So whenever I am comparing the data with the previous year, it is known as YOY, year on year data. And if I am compare with this base year, then I will find actual GDP or real GDP. So that is why this is a reference year. Now there are 2 criteria to select a base year, because UPSC can ask the question of base year regarding GDP, because they are not asking the terms related to the news, they are actually creating a subdivision of that. So terms related to GDP back series data are very important for examination purpose. They are not asking about this, they will ask about base year, they will ask about GDP, they will ask about national income, they will ask about new methodologies of GDP, these are things. So here base year is certainly we can say reference year, and there are two criteria to select the base year. First criteria is it should be a normal year, and second is it should be a latest year. Previous to this, what was the base year? Previous to 2011-12? 2004 and 2005 was the old base year. Generally government changed in 5 years, because in 5 years consumption pattern changed. If you compare the consumption pattern of year 2000 with 2005, with 2010, with 2015, 2020, consumption pattern has changed drastically. So every 5 years government generally change the base year. But first condition, it should be a normal year. So 5 years somewhere or the other lies in 2009-10, but this was not the normal year. Why? Because of the crisis, subprime crisis in the United States of America. So government not selected this. It should be a latest year. We are in 2018-19. We cannot refer to the consumption level of 2004-5 for the growth of 2018-19. So it should be a latest year. So this is a latest year. We have changed in 2015. So it means again we can say that in next 2 years government is due with the change in the base year. Now you can say, like suppose for example the condition of a smartphone condition in 2004-5 and 2011-12. Obviously the consumption level has changed dramatically. I am talking about a smartphone. You think about only phone. That is why we need a new base year, because if you compare with this, growth figures are obviously deviating, not actual. So here the most important thing is base year. Any doubt till this point? Any doubt? No? What? It should be a normal year. There is no crisis or no boom also. Suppose government experience high growth rate for 1 year. That is not normal. Suppose you are giving preliminary test. In one test you get 30 out of 200. And in other tests you get 160 out of 200. But on an average your score was 90 to 100. So this was not a normal paper. Suppose you are not good in science, you will get 30. You are good in history, because you have history optional, you get 160. These are not normal. Normal are average. So it should be average. Now here I am talking about only moving in the forward direction. Like if you have taken 2011-12 base year, we will compare the GDP data of coming years. But if you compare the old data, suppose for example if I am calculating GDP of 2008-9, obviously the figure which we are having is having the base year of 2004-5. Now if you want to calculate this particular data with the new base year, that is what we call back series data. Okay. It means you are backtracking, but your here reference year at that time was 2004-5. But now if you want to compare all the data preceding to this year or before this particular year, so you will find that this is what we call the back series. It means reverting back. So if you compare with this, CSO and Niti Aayog came out in the public and said that on an average the growth was 6.7%. And you know that the years of 2004 to 2000, we can say 8, for these 4 years India's growth story was very high. In the historically India achieved very high growth rate. But this back series data suggested that for the period of government UPA 1 and 2, it means from 2004 to 2014, average GDP growth rate was 6.7%. And according to old base year, the data was very high. On the same base year, this NDA government, latest NDA government, was having 7.3 on an average GDP growth rate. These are actual figures. So you can quote in the examination. UPSC will not ask, but you can use in the mains examination. So UPA 1 and UPA 2. So this is obviously not accepted by the majority of the intellectuals or economists. So they said that this is a wrong methodology. to calculate. But these are the statistical tools you can use and you can calculate. So the basic here what is important for our examination purpose is the terms. Base year is the terms who calculate GDP. GDP includes all the final products. If suppose for example there is a new trend in UPSC, they are asking traditional topics, but they are not giving options, they are giving examples. Suppose for example UPSC will ask question, which of the following is the part of GDP calculation in India? If first option a statement, stainless steel, second is your crude steel, third one is your rooftop of a particular house. In these three statements, which one is the final product? Roof. If you use that particular steel for making any other thing, that is becomes intermediate. So you have to find out which is intermediary and which is final product. Like this chair is what? Final product. But the mica attached to this particular thing is intermediary, because mica also produced somewhere else. They have calculated the value, but after calculating this value of chair, you have to deduct the value of mica, to deduct the value of rexine, etc. So please be careful about the options, examples, and in examination you should write. लिख लेना, कोई issue नहीं है. There is no issue. There is no harm. You write what will be the final product of this particular thing, because if you think you will miss out somewhere else. Okay. So we'll write few lines about this. You write that in GDP back series data. Because consumption level has changed. If you compare the consumption level, like for example 2004-05, what was the status of coaching industry? There was hardly any, but in 2018-19 there were many, flood of coaching. Getting one. There was also 2004-05 and 2004-05 base year. Government was not including these beauty parlors, etc. But now you know, this is written by the government. I am not making it funny, but this is claimed by the government. Another thing is, in 2004 there was a high weightage of calculators. Now you know who use calculator. Apart from shops, we at home or for daily life, we do not use calculators. Getting my point? So we will not go into the debate. You write first. A GDP back series data was calculated by CSO in collaboration with Niti Aayog. First off, they have calculated the data. They have calculated the data with reference to 2011-12 base year. 2011-12 base year. First off, government has calculated since 2005-06. Since 2005-06. Till 2014. Till 2014. First up, next line. Government adopted new methodology to calculate GDP. Government adopted new methodology to calculate GDP. Government adopted new methodology to calculate GDP in 2015. In 2015. According to the United Nations system of national accounts, according to the United Nations system of national accounts, full stop, next line. New data shows that the growth rate was 6.7%. Growth rate was 6.7% in both UPA 1 and UPA 2 era. In both UPA 1 and UPA 2 era. but the earlier estimates were 8.1 and 7.4 respectively. 8.1 and 7.4 respectively. Full stop. Just listen. So according to these two organizations, India never grew at 9% plus. On the contrary, it was a proud moment for us to grow at 9%. And in 2008, before the crisis, we were planning to achieve that double-digit growth rate. So obviously, this is not working in the favor of country at international level. So here we can say that this particular data is not authentic. This is the conclusion of the many economists. Government gave it, maybe propaganda or any other thing, but just because we cannot rely on back series data. We have when we have actual data. Next, you write next line. A definition of GDP, or you cut the definition of GDP. You write one more line after that paragraph. India did not recover as quickly as it was thought. From the 2008 crisis. Okay. So I hope you understand. This was the notion that India was not impacted very severely from that crisis, because India was having robust economic infrastructure, strong macroeconomic fundamentals. That is why there was not a much effect of this crisis. But according to this GDP back series data, the recovery was very slow as it was originally thought of. One very important statement for examination purpose. Now you write GDP. Next is GDP. Now you know that there is a basic concept of a GDP and a GVA. So when government changed the methodology in 2015, government changed the methodology from GDP to GVA. Now India is calculating its GDP on the basis of GVA. GDP is gross domestic product. Here this is the gross value addition. It means whatever value addition you are doing on each and every stage of the production, it will count as the growth. So GVA actually India was calculating previously also, but GDP is generally known as sector specific, like agriculture, industry, services. So all these sectors GVA will calculate and will sum up all these GVA of each and every sector and will get the GVA of whole country. If you add taxes and deduct subsidies, you will arrive at GDP. So this formula is not important for you, but here the important thing is how we arrive from GVA to GDP. So taxes we are adding, subsidies we are deducting. Why? Because taxes are actually contributing towards the cost of production. If GST is increased from 18% to 28%, the cost of that particular product will go up. In market you will find more dearer. If you are providing subsidy, it means you are reducing the cost of production for the producer. If you are providing free electricity, so there won't be any electricity bill. So cost of production will go down. So they will charge less from the consumers. Getting my point? So that is why we have to add tax and deduct subsidy in order to arrive at GDP figure. So if the question comes, India calculates its national income on the basis of GVA, then the statement is correct, because revised national income calculation implemented in 2015. Any doubt in this? So we'll write this. GDP is a monetary value of all the final goods and services. GDP is the monetary value of all the final goods and services produced within the domestic territory, produced within the domestic territory, produced within the domestic territory of a country in a particular financial year, of a country in a particular financial year. So this is the definition of GDP. Next you write what is GVA. So you write it is the value addition of goods and services. It is the value addition of goods and services, produced in the economy, produced in the economy. In bracket you write GVA generally a sector specific calculation, GVA generally a sector specific calculation. Now then write the next term is base year. Base year. Put a colon, you write it is a reference year. It is a reference year. It is a reference year to measure the growth of, any variable in the current scenario, any variable in the current scenario. In bracket you write for example GDP, inflation, industrial output, etc. Heard about IIP, Index of Industrial Production? That is also having the base year of 2011-12. Inflation, inflation generally we can say that when there is a rise in the value of commodity. So rise in the value of the commodity can be in one specific commodity. So whenever we write the definition of inflation, we should write it is a persistent increase in the value of, average value of all the commodity. Suppose for example one day you will find that onion shot up, that is not inflation, because on the other day it will come down, and that is also in one commodity, not in all the vegetables. So we cannot consider as a food inflation. So inflation is the persistent increase in the average value of all the commodities, average value. So if onion is going up for one day, that is not average, monthly average, weekly average, yearly average, depends on the calculation. Getting on? Inflation is calculated by two index majorly. Generally there are three methods, but GDP deflator is not using. So two methods are, yes please, WPI and CPI. So WPI measures on the basis of wholesale product, CPI on the basis of retail. WPI does not include services, but consumer price index includes services. The base year of CPI is 2012, WPI's base year is 2011-12, we changed, previously it was 2004-05. So that is the inflation. So keywords are persistent increase, not one day increase, long term increase in the average value of all the commodities, that is inflation. You will find in the economy notes, module notes. So base year. So you write next. There are two important parameters to select a base year. There are two important parameters to select a base year. Yes, please. It should be a normal year. First one you write. It should be a normal year. Second one, it should be a latest year. It should be a normal year and it should be a latest year. First off, now people are asking why government is calculating back series data. So government said that we have now updated data. digitalized data from Ministry of Corporate Affairs. So Ministry of Corporate Affairs 21, MCA 21, you heard about this term? And this MCA 21 is very important because it is related to e-governance. And according to this data, government get certain kind of new figures, facts and figure. So government thought, or government said that this particular data is available only after 2011 and 12. So we had no option and we had to backtrack. So that's the argument given by the government. So if you want to write, you can write on your own that because government was having MCA data, Ministry of Corporate Affairs data, 21 is 21st century, just because related to e-governance. So in the sub, लिखो, shall I dictate? You write. Government's argument was that since we are having MCA 21 data, we had to backtrack in order to compare current data with the previous decade. I hope you understand till this point. Write one line. We will discuss about what is the major important thing in the new method, why new method is important and why new method is showing high growth rate. If you see this particular government when it came into the power, 2014-15 was the first fiscal. The growth rate was hovering around 4.5%. This was the exact data. That is known as sub 5% growth. It means below 5%. But in 2015 they have changed the methodology, and next year they clocked 7.3%. People were saying that they have changed the methodology, now growth is showing very high, but it was in the favor of our country and the methodology was correct, just because they have changed the base year. So that's the one argument. Consumption level has been changed in 2014-15 in comparison to 2004 and 5. So we cannot compare the current data with the decade old data. And the second thing, they have included new items like smartphones, like they have deleted old items like calculator. They have included new types of income like parlor, coaching, tuitions, etc. So you write one line in favor of new method. New method of calculating GDP is robust. New method of calculating GDP is robust. What's the meaning of robust? Strong. To measure the estimates, first off, you like estimates like consumption, comma employment, comma performance of enterprise and factories, performance of enterprise and factories, and it includes factors which are responsible or factors which are more responsive, or it includes factors which are more responsive to the current changes, So it means this new methodology included a lot of new factors that are very prone to current changes. They can change frequently. In the old series, these frequent changes, the time period was 2 to 3 years. So it was not reflecting in the 1 year data, but now the new factors are involving in the data. So that's the end of this topic. And any doubt regarding this back series data, any doubt regarding basics? So please, if you have time, just read the NCRT, little bit basic terms, what is national income, what is intermediary goods, what are these. 12th class NCRT, in the last page you will find terminology, glossaries, and these terminologies are very vital just because of this thing in the news. You may expect the question on GDP or national income, any basic question, because last time, as I said in the seminar, there was the question of opportunity cost. Why I am putting a stress on opportunity cost? Because this was opportunity cost is the term related to microeconomics, and UPSC is not asking microeconomics, they are asking only Indian economy, and Indian economy is the part of macroeconomics. Macroeconomics means a big level economics, aggregate economics. Microeconomics deals with industry, particular industry. That's why I am putting stress. They may ask any term. So they have asked opportunity cost just because of demonetization. So opportunity cost of suppose for example you are attending a wedding ceremony tonight. The opportunity cost of attending that wedding ceremony is sacrificing 2 or 3 hours of study. That is the opportunity cost. Opportunity cost of demonetization was low amount of GDP, production hampered, a huge amount of work for banks, and that is useless, totally useless. Okay. Next topic is credit rating agencies. Now there are 7 credit rating agencies registered under SEBI, but they will not ask name. What they will ask, I hope you understand till this point, like from where questions are coming. Repeatedly I am telling you in each and every topic that what you have to put a stress more. Here under credit rating agency, they will not ask the name of the credit rating agency. These are not state PSCs. State PSCs, they are asking that among the following which are not the credit rating agency. But here the question is, who controls credit rating agency? If you are suppose thinking about opening credit rating agency, where you have to register it? What are the criterias or declaring credit rating agencies? Getting my point? What are the parameters that credit rating agencies are using in order to provide certain kind of ratings to companies, banks, etc. Okay, I hope you are getting my point. So SEBI controls credit rating agencies. So you write Securities and Exchange Board of India or SEBI empowers to regulate credit rating agencies. Empowers to regulate credit rating agencies by Credit Rating Agencies Regulation 1999. By Credit Rating Agencies Regulation 1999. Now there are certain kind of ratings like BBB, AAA, AA. Heard about these terms? Like India got the BBB rating from Moody's rating agency. This was the big news last year. So this types of ratings are given by rating agencies. Now why these ratings are important? Any idea? Further lending, or you will get a low cost money. If you are a firm, suppose I am having BBB rating, I will get loan at 10%. If I am having AA, I will get 9%. If I am at AAA, it means I will get loans at 7%. So it is beneficial for me to get higher and higher rating. How will you get this rating? Timely payment of loans, interest plus principal amount. You will not default on the loan, you will get the higher rating. But there was a weak regulation, there was a weak norms. That is why they have given high ratings to ILFS also. But what happened to that? Defaulted. So there is a big question mark on credit rating agencies, how they are giving ratings if these companies are failing. So these are also in the news. So credit rating agencies are very vital for examination purpose. So SEBI actually recently tightens the norms of credit rating agencies. So have you written something? So you write due to, next line, due to ILFS case, SEBI tightened the norms of CRA, credit rating agency. So there are a lot of norms, but 4 are important. So we'll write one by one. First one, credit rating or CRA, you write CRA should disclose the liquidity position of the company. Should disclose the liquidity position of a company. Now understand this sentence. What's the meaning of liquidity position of a company? If suppose I am investing in a company, I have full right to know the liquidity condition of the company. If they will show me a false details, then I am at risk. So in order to protect the interest of the investors, if you see the objectives of the SEBI, the most important objective is to protect the interest of the investors. So first point is very vital. You have to show, if you are a credit rating agency, you have to disclose the liquidity position of the company. Second point, CRA should check the asset liability mismatch of the company. Asset liability mismatch of the company. So for your reminder, in bracket you write cash flow, comma LCR. What is LCR? Liquidity coverage ratio, comma debt servicing, etc. Next point, CRA should disclose any source or rationale if a company is expecting additional funds So simple sentence. Do you need any explanation in this sentence? Fourth point you write, CRA should publish historically average ratings in a transitional manner. Like trend, suppose in 2019 a company is having 5-star, 4.5, 4.2, 4. So we'll invest in this company, obviously, because this company is showing growth. That is why CRA should publish the historical data also, the trend. This is a major important point, fourth point, because they were not publishing historical data, they were showing only the current data. So if the current position of a company is good, you will invest, but you have to see the trend. Like for example, if you sit in the UPSC interview boardroom, you will find that they will see your mark sheet, and they will see your growth from your 12th graduation, PG or whatever it is. So if you are growing, it means the student is working hard, is gaining. Getting my point? So we'll see, and they will see that he has certain kind of potential to run the country. So historical trend is very important, very vital. Okay. Now there are certain kind of reasons for the failure of CRAs, like paid ratings. Getting my point? है ना? There is one website, popular website, that ranks actually colleges on the website. So that is a paid ratings. So somewhere these credit rating agencies are giving higher ratings in return with the sum of money. Otherwise rating quality is also down. Rating quality, what does it mean? It means the parameters you are rating that particular company is very simple. Like if you are declaring any person as a literate, what are the criteria? Read, write and speak. Speak का भी नहीं है, that is read and write. And that too what? In any language, what? Name. Only the name of the person. You are literate. So your faulty parameters. You will achieve 76% literacy. फिर भी 24 is less. You can understand. So these are faulty parameters. So you have to correct the parameters first. So that is what we call low rating quality. So you write reasons for the failure. Reasons for the failure. First one, paid ratings. Second is your poor rating quality. And the third most important thing is, I said in the beginning of this topic, there are how many credit rating agencies? 7. It means you can count on fingers. So if you have less sellers and more number of buyers, what type of market is? Oligopoly. Like in OPEC, a few countries, they are making cartel, they are regulating prices. In telecom, India, there are few players, you can count on fingers. Airtel, Idea, BSNL, Vodafone. Anything else? Nothing. 4 or 5. That is also oligopoly. So they are making cartel. So you write, there is less competition in the credit rating agency or agencies, credit rating agencies. Okay. So that completes the topic of credit rating agencies. Now credit rating agency should be registered under SEBI. That is the most important thing. ये लिखा आपने? लिखा है कहीं? Very important news. You must have heard about this news somewhere or the other. RBI surplus transfers to government. So how much amount? 28,000 crore was recently transferred by Reserve Bank of India to Government of India. RBI to Government of India. And this is in H1 of 2018 and 19. What is the meaning of H1? Like Q1, Q2, Q3, Q4 you heard about? This is first half of 2018-19. What is the financial year of RBI? First July to 30th June. This is the financial year of RBI, not April, March. So be careful about this. It means the money transferred is for H1 of 18-19. H1 of 18-19 is from July to December 2018. So the last 6 months. Now we are in H2 of 18-19 according to RBI. And that will go up to 30th June 2019. And government is demanding more. This 28,000 crore is in addition to previously transferred 40,000 crores. So total amount is 68,000 crore RBI already transferred from its surplus, and that surplus is known as interim surplus. Interim, you must have heard about the word interim. No, it is inbuilt, internal of the RBI. So what RBI is earning surplus? How RBI is earning money? Can you tell me any source how RBI is earning money? Bank deposit. RBI is not earning money. Penalties, like from its statutory powers. Like suppose I think 2 months back they've imposed a penalty, hefty penalty on Yes Bank. So that was a frequent practice. So from its statutory power, RBI is earning money. Now you will tell me, I'll ask you a simple question. Is it allowed under any statutory provision that government can demand any amount of money from RBI from its internal surplus? No. Or is there any limit? Limit hai. Why? The way I asked the question? No. There is no limit. According to RBI Act, RBI is bound to give any amount to Government of India. Why? Because it is under the control of Government of India. Suppose for example these are the shareholders and these are the companies. For example, these are the shareholders because shareholders are the owner of the company and this is the company. So if this company is having surplus amount of money, shareholders can demand any share of the surplus. I am not asking of the revenue, I am saying surplus means extra. So can demand. But the criticism from the intellectuals, from the media, newspapers is this, that these are not the relation of shareholders and the companies. They are the public relation. RBI has to work. RBI has some statutory regulatory roles that RBI has to perform. So they need money. You cannot demand anything. Why government was demanding? What is the reason? This was the latest February, mid-February news. Why government was demanding? If government is demanding some money, fiscal deficit, to fund its fiscal deficit, because in the budget they have announced that fiscal deficit for current fiscal is 3.4% and the target according to FRBM review committee under encasing was, yes please, these are important figures here, cannot afford to forget, 3.1%. It means there was also a breach of 30 basis point and next year the target is 3% and government pegged at 3.1%. So again a breach of 10 basis point. So to fund this, it means for the remaining months January, February and March, government has been finding very difficult to maintain at 3.4. How they will earn money? They cannot impose tax just because of the election due. Actually they have given rebate in the budget. They cannot increase GST. If you see the trend, they are continuously cutting the GST rates. What other source of income? They cannot borrow, because if they will borrow, the debt to GDP will go up, and according to FRBM review committee, debt to GDP of central government should be 40% and currently it is 46. So they cannot borrow, otherwise they will breach this. Their disinvestment target is 80,000 crore for this fiscal. Till this point they have collected 56,000 crore. It means this is also falling short. These are actual figures. So no other option. You have to recapitalize banks as well, just because of problem of NPA. So thinking from the government's point of view, it is very difficult to manage funds to maintain 3.4 fiscal deficit. That's why government asked for RBI that you should transfer the interim surplus to the government in order to fund the fiscal deficit. Why I am telling you this story? Because after listening to this story, don't have to mug up. You will get the situation. Suppose you are running the government. Running the government is simple, running a home, running a business. You are not able to capitalize here, not able to capitalize here. Then you are obviously, if you have multiple sources of income, you will actually see for other sources. So only one source left was RBI to Government of India. Next year this target government has increased. But the main problem, the main criticism, this is simple, normal, daily life. What government said to RBI that you should transfer more on the basis of next year's receipts. Whatever I am receiving next year, you should give in this fiscal. That's where the debate started. Getting my point? For the next year, whatever RBI will give to the government is demanding in this fiscal itself. It means before 31st March. That's where the debate started. But according to the RBI Act, government can, obviously RBI has to do whatever government is saying. This is the total issue. I hope you understand. Any doubt regarding this surplus transfer, anything related statutory provisions, it means there is no limit. So there is a panel that will review the economic capital framework under the chairmanship of, name please, Bimal Jalan. So he will review that there must be some regulation to govern this. And I think according to me or according to newspapers or experts, I went in December to Vellore. There were top 5,000 economists of our country. There was C. Rangarajan, etc. So I was attending that conference. I was in consultation with Nachiket Moore. You heard his name? He was the deputy governor in 2013, deputy governor of RBI. So he said that there must be some upper limit. I asked him that this can go on and on. If central government will demand something else, 2 years, 3 years, what RBI will do? So there must be some cap for a particular fiscal. That beyond this particular figure, suppose for example 30,000 crores, RBI cannot transfer or Government of India cannot demand from Reserve Bank of India. Okay. So we will write, the heading is RBI surplus transfers. You write, for the second successive year, government demanded interim surplus from RBI. For the second successive year, government demanded interim surplus. First up, I am not dictating any figure. Okay. So if you want to write, you can write in the last. These 28,000, these are the things. But this will not come in the examination. What the main important figure? This is the target. So whenever you are dealing with economics, you remember either targets or big figures. Target years, like doubling the farmer's income. What is the target year? 2020-22. So these years are important. These are factual information. Getting my point? What figure you have to remember? Fiscal deficit, very important. Government, RBI is fighting all over it. The main issue is maintaining the fiscal deficit. Fiscal deficit is regulating the borrowing. In simple, do you know the formula of fiscal deficit? Total expenditure minus total receipts except borrowing. So fiscal deficit shows actually the borrowing by the government. So in simple sense, we can say fiscal deficit is equivalent to borrowing of the government. Getting my point? So right, can you please tell me the sentence?
For the second successive year, government demanded interim surplus
From RBI to fund its fiscal deficit. To fund its fiscal deficit. Because center has to meet 3.4% of fiscal deficit. 3.4% of fiscal deficit for 2018-19. For 2018-19 against the target of 3.1%. Against the target of 3.1%. Next line, next paragraph. There is a limited audit review. There is a limited audit review to see the extent of economic capital framework under the panel headed by Bimal Jalan. Who was he? Under the panel of Bimal Jalan. Full stop. Transferring interim surplus is having no limit. Transferring interim surplus is having no limit. But the issue arised when center advancing a receipt from the next fiscal to bail itself out in the current one. And that is quite huge. So I remember the exact figure, 82,911 crore for the next fiscal. Government is demanding current fiscal. So that's where the debate is started. And government is demanding these funds from contingency reserves as well. Actually, this was started by Urjit Patel, but the amount was less, 10,000 crores. 10,000 crores is negligible. Then they again demanded more. Then he resigned. And you know the difference between the last three governors. I don't have to say anything. So you can understand. So for the next fiscal, they are demanding in this fiscal, 82,911 crores, the exact amount quoted by Government of India in its Gazette notification. So right, there is nothing wrong in demanding shareholding. From the interim dividend to pay out the government, from the interim government to from the interim surplus pay out to the government. That's the end of this topic. Any doubt? After your class notes, you no need to refer anything, because I referred every source, at least 10 sources for each and every topic. If you find anything extra, I am sure that is not relevant for the examination purpose. So I left only those things which are not relevant for the examination purpose. So are you getting everything? Na? It is easy. Any doubt? If you have any doubt, you can ask him freely. Very important. National pension system. Small topic, will not take much time. Heard about this national pension system? Any idea? Any idea? 01 January 2004. This was a big deadline. After this date, government discontinued with the pension. So all the government employees joined service after this date, they are not having pension from the exchequer. They have what? They have pension, but in a certain different form, that is contributory form. Something contributed by employer and something by employee. Getting my point? So that is a pooled funds. So it actually initially was for government employees, central government employees, but in 2009 it opened for all. It means private companies can also join this, but employer and employee has to contribute. Employer here in the government service is obviously central government and central government service. If your other company is joining, obviously employer is the company and employee is the workers. So you write national pension system is a contributory or defined contributory scheme, you write, is a defined contributory scheme by Government of India. Full stop. It is for new entrants. It is for new entrants who joined the government service. Who joined the government service. You write this date after 1st January 2004. So there is no concept in this, these are factual information. In bracket you write open for all in 2009. Open for all in 2009. Now this national pension system was is implemented by, any idea? Who regulates this? So you write national pension system is regulated by Pension Fund Regulatory and Development Authority. Pension Fund Regulatory and Development Authority. This is important point for examination purpose. Next point is very, very important. Who can join the scheme? So from the age of 18 to the age of 60, anyone can join. Okay, so you write all the citizens can join this scheme from the age of 18 to 60 years. From the age of 18 to 60 years. Now if the statement comes that an Indian living in Abu Dhabi can join national pension system, what will be the answer?
Not the citizen. Depends upon citizen.
Citizen can be resident or non-resident. So I am here mentioning citizen. So in bracket you write residents as well as non-resident can join. क्योंकि उसमें citizen लिखा है, the word is citizen. That's where UPSC plays the game.
अगर आपने जो ज्वाइन करेगा तो फिर एम्प्लॉई फॉर्म होगा
Abu Dhabi, जो भी वहाँ, wherever he is working. If that company and the employee is willing to join that scheme. I got your idea. So obviously it depends. If there is no employer, you can contribute. Saving instrument. That is mainly for organizing. Why it is in news? I'll tell you. And in interim budget there is also a scheme, pension scheme for unorganized sector. That is why question may come. So this was also news. Pension is also in the news. So we can expect any question. Okay, so you write all the citizens. There are you write there are two tiers of national pension system. There are two tiers so tier 1 and tier 2. There are two tiers of national pension system. Now just understand, under tier 1 the amount is non-withdrawal, you cannot withdraw the amount, and you will get the amount at the age or after 60 years at the time of retirement. So these are same, and these are, if I will ask you, tier 1 pension under NPS are fully exempted from the tax. What do you think? Tier 1 pensions under NPS are fully exempted from the tax. Tax at the time of withdrawal. Tax is always imposed at the time of withdrawal. Suppose you are making FD also in bank, they will not charge, but whenever you withdraw the money, they will charge. So under tier 1, that is full tax exemption. So that is what we call EEE category. Exempt, exempt and exempt. There is another category also, EET, exempt, exempt and tax. At the last stage they will impose. I will explain what is. Under tier 2 there is a withdrawal allowed, but previously it was fully comes under the taxable, but now government revised this regulation, that is why it was in news, just because to appease the population. So government, what government did? Government put this tier 2 pensions into the standard deduction or exemption limit under 80C. So you can claim the tax refund up to 1.5 lakh, and you can withdraw a tier 2 pension anytime. So you write this thing, tier 1. Under tier 1 you write it is non-withdrawal, it is non-withdrawal and fully tax exempted, and fully tax exempted. These are voluntary saving. Under tier 2 you write these are voluntary saving and taxable, and taxable and taxable, but you write but deduction can be claimed up to 1.5 lakh under 80C. Deduction can be claimed up to 1.5 lakh under 80C. 80C of Income Tax Act 1961, and it is a popular term, that is why I am not dictating it. Okay. But there is a 3-year lock-in period. But there is a 3-year lock-in period. These stages are exempt at the entry, exempt at the investment and exempt at the maturity. Previously it was exempt at the first two and taxable at the maturity. So that is the meaning of EEE and EET. So this is comes under EET and this is EEE. So yeah, entry, investment, maturity. Sorry for the bad handwriting. Entry, investment and maturity. Depend करता है situation. You can claim deduction because these are also savings and government is promoting saving. Because they will impose tax at the maturity if it breaches the limit of how much? 1.5 lakh. If I am contributing, I will get the amount after the age of 60 at the time of retirement. I cannot withdraw money. So that is voluntary options. You have options. This actually opened after 2009. This was central government. But there are certain criterias, like if you have marriage, daughter's marriage, if you have big function, you can withdraw certain percentage. I'm not going into technicalities. There is a 60-40 ratio. So you can also, by using certain kind of laws, you can withdraw a whole amount, full 100% amount without any tax. That I have done. 60% upfront, that is tax exemption currently, because I was working in the university previously. So I had certain amount of pension fund. So what happened? Under tier 2 there was a tax. So I don't want to pay the tax. So what I did? I withdraw 60% and 40% in the form of NUT. In the form of NUT you will get money in 1 year, but you will get fully exempted. So that's how you can use the, but that is not important for UPSC. UPSC is asking only taxable or non-taxable, these EE, ET. I think no need to go in technicalities. Okay. So you write new features. Next subheading is new features introduced by the government. So because of these new features, it was in news. Government contribution under it increased from 10% to 14%. 10% to 14%. Next point. Investors will get more freedom. Investors will get more freedom of choice for investment. More freedom of choice for investment. Full stop. Next point. Now the employer's contribution is high. Now the employer's contribution is high. So the beneficiary will get more benefit with the same contribution. Last point. Beneficiaries will get tax exemptions. Beneficiaries will get tax exemptions. This is our last topic for today, very important topic. So be careful. I know this is the last, I think 2.5 hours we have done. So please concentrate. 2.5 we have done, almost 2.5. But be careful about this topic. I'm giving you 99% guarantee the question will come related to ECB or rupee depreciation, because this was the news since July to December 2018. So between these 6 months, ECB was in the news, and if you find anything for longer than 15 days, that becomes very important for UPSC. And in economics, generally a topic lasts about 7 days, and it lasted around 6 months. Still in the news. In February also, you will find in the Hindu. So ECB norms. Heard about ECB external commercial borrowings? Here your basics will come into the pictures, how to link this perspective from the basics. So if you have clear about the balance of payment, heard about balance of payment? There are two accounts in the balance of payment, current account and capital account. So here we are dealing with trade and these are short term, so we will not deal with capital account. Capital account is investment, FDI, FPI. We will link ECB. ECB is the part of capital account, but we will link this ECB with current account, because the most important, what we call twin deficits, twin deficits, there are two deficits, fiscal deficit and current account deficits. These two deficits are very important because government generally borrows and not able to repay. Current account deficit because India's exports are low and imports are high, and lot of our exports are dependent on imports. Can you give me an example? Lot of imports, lot of India's imports or lot of India's exports are dependent on imports. Like for example, we import crude oil and we export refined petrol, gold and jewelry. So raw gold and jewelry. So these are the example of that India's exports are dependent on India's imports. I remember Dharmendra Pradhan, the Minister of Petroleum and Natural Gas, he said, one journalist asked that, why India's exports are down? So he said that, because crude oil prices are down, so we cannot charge more for refined oil. If this is high crude oil prices, then there is also a problem. They will give boost to the export, but they will also raise your import receipts. So that is not a healthy sign for India. It means there is also a worry sign in both these places. That is why ECB is a best tool to fund the current account deficit. Now just understand, ECBs are actually a tool to borrow money for the companies. External, the word is commercial borrowings. So government will not borrow money. Who will borrow? Suppose for example, there is a company TCS. This will borrow money from abroad. Okay, listen carefully. Important relations. So suppose from any US bank, TCS borrowed money. This USA or any bank of USA will give TCS in terms of which currency? Dollar. TCS will use this money in the Indian market in terms of rupees. Suppose the dollar to rupee rate is 70 rupees per dollar. Listen carefully. Huh? लिख लेना बाद में. Do not write anything. I'll not explain again. Just listen. 70 a dollar. Then, if USA, the bank of the USA will give TCS to dollar, these dollars will go to, because TCS will not use these dollars. If TCS will receive dollars, these dollars will deposit to RBI, because the basic function, foreign exchange reserves. Who held foreign exchange reserves in India? RBI. Currently it is around, it is less than 400, but the all-time highest is 404 billion US dollar. Now it is around 393. So RBI will take all the dollars and will give rupee to TCS to spend in the economy, whatever they are spending. Now, who is having the obligation to repay this loan next year? TCS, not RBI, not central government. But who is getting dollars? RBI. So without increasing any exports, without taking any loan, RBI is getting dollars to fund current account deficit. That is why when rupee depreciated in the last 6 months of 2018, RBI and Government of India relaxes the ECB norms. You can borrow easily on ECB. There was a limit of 25 lakh, they have raised the limit. So companies were going abroad. There is also one benefit, interest rate in US and India, if you compare, where you will find cheaper interest rate to borrow money? US, not in India. India is having high interest rates. So borrowing money is very, very difficult. We borrowed money, loan for bullet train at 0.1% interest rate. Can you imagine the same interest rate in India anywhere else? 10%, 9% on house loan, car loan, 15% on educational loan. So India is having inherently high interest rate. So generally these companies prefer ECB because in USA you will get 2%, but there is a risk. What is the risk? Fluctuation in here. Suppose they have borrowed at 70 per dollar, but next year suppose the rate goes to 75 a dollar. It means for every dollar TCS has to pay 5 rupees extra, and that becomes very risky. To control this, there is a term called hedging or hedge. It means protecting the borrowers from the risk of currency appreciation and depreciation. So this term UPSC can ask, what is the meaning of hedging? The term hedging means, again and again I am saying I will make you write everything. Again and again I am not pointing you, but I am seeing you. I will explain each and everything, do not worry, I will dictate each and everything, then only you are writing. If you not understand what, this is written in the notes, this is written on internet, The Hindu, everywhere else. But here, why are you here? Just for the explanation? Okay, just listen to me. So hedging, according to hedging, what? There are certain kind of dealers known as arbitrage. Arbitrage are the dealers dealing in currency market, like brokers in the stock market. So arbitrage is the term which are taking risk in the currency market. Suppose they are predicted that rupee will appreciate in next month. So they will, what they will do? They will purchase and they will sell in the next month, if they predict that depreciation is the case. So arbitrage was a very big business in 90s, but due to internet or lot of information, you will find dollar and rupee rate each and every second. Previously it was at the end of the day, what, on telephone calls. But now arbitrage business is down. So they are actually having low margins. So hedging is done by, so these companies are providing or adopting hedge funds or hedging. So that is, hedging means simply protecting the borrower from the risk of anything. So here in foreign exchange market, risk of fluctuations in the currency, appreciation or depreciation. Any doubt in this relation? Yes.
Sir, who provides hedge fund?
Arbitrage. Like broker provides shares. So hedge is the instrument. Hedging means protecting the risk of, here we are dealing with foreign exchange. So
So here is the risk of like 5 rupees. So he will provide.
suppose that arbitrage is thinking or is predicting that next year rupee will depreciate to 72 only, but TCS thinking about 75. So this arbitrage will say that you just pay 72. That is the fix. If it goes 75, 3 rupees, this arbitrage will extra pay. If it goes to 69, this arbitrage will gain. That is the risk, and that is their business. Okay, so we will write quickly and we will end up the class. First we will write what is ECB. External commercial borrowings are the financial instruments to borrow money. Are the financial instruments to borrow money from the foreign sources, to commercial activities. Sources to commercial activities. Next line, RBI eased the minimum average maturity requirement. Next line, RBI eased the minimum average maturity requirement for ECB in infrastructure sector. For ECB in infrastructure sector, in bracket you write for 3 years. Next line, ECB can be in the form of bank loan. ECB can be in the form of bank loan, comma, buyer's credit, comma buyer's credit or securitized instruments Okay. Now all these are short term. In bracket you write, फिर लिख लो. In bracket you write not for equity capital, otherwise it becomes FDI. I hope you understand the difference. Full stop. Next line. ECB comes under FEMA 1999. ECB comes under FEMA, that is Foreign Exchange Management Act 1999, under two routes. First one automatic and second one is approval route. Now you write advantages, because UPSC will ask advantages. That's why RBI is using it. There are certain kind of advantage. First advantage of ECB, low cost funds. You write first is low cost funds. Second is diversified investors base. Diversified investor base. You understand this term? It means you can borrow from home as well as from abroad. So you have many options. Third one, government will get forex to fund current account deficit. Government will get funds what happened? Government will get forex to fund current account deficit without any sovereign debt. Sovereign debt, you understand? Without any sovereign debt. It means debt on government. Without any sovereign debt. Next is your disadvantage. There are two disadvantages, you write. Two disadvantages. First is it will increase the external debt of India. First, it will increase the external debt of India. Second, yes please, we discuss second. So there is a currency risk. There is a currency risk. That can be covered by the process of hedging. So in the next line, note करके लिख लो, what's the meaning of hedging? It refers to protecting the risk from volatility in the market, by providing cushion such as against heavy appreciation and depreciation. Full stop. It is provided by arbitrage. ठीक है, thank you so much. We'll meet tomorrow. Take a lot of doubts, whatever you have in current affairs and traditional, and give me a list. So we'll discuss in the class if it is related to the topic. Otherwise, we'll discuss outside the class. ठीक है, thank you so much.